Matthew Salthouse, CEO, Kainantu Resources Ltd, TSX listed, Kainantu Resources Ltd, KRL. KRL's had a really interesting transformation for a few months since the end of 2021. Cap raised capital. We've executed a terrific deal with Harmony in relation to Teke asset transformational. It's an opportunity to bring resource into our company. In the process of completing some exciting geophysical work in relation to our existing portfolio in Kainantu. So we've got a great story to tell in terms of corporate initiatives leading to value accretion and also in relation to what we've been doing in the field.
Matthew, good to see you. Thanks for joining us. It's been a while, October, I think, since we last spoke to you. How are things in Singapore?
Things are good. Things very good. Things are getting back to normal as they are all over the world, and travel's opened up, which is we've been able to get closer to our shareholders in Canada and to our assets in Papua New Guinea.
That's what all CEOs want to do. Get out there and get on the road. So I've noticed a few things. You've raised a bit of money recently, nearly $3 million. Also done that deal with Harmony, which I think, I think that's good news. Can we just have a quick review of like the last 18 months or so? Has it gone to plan? Because it feels like it hasn't had much pace to it. Am I wrong?
Look, I would probably contest that, to be quite frank. We started this company listed in December 2020, really with a portfolio of just two exciting but prospective tenements in Kainantu. And I think we're now, 2 years down the track or 18 months or what have you from listing. We've raised capital twice, probably about $8 million or so raised in capital, which has been redeployed into the ground. We've got some exciting developments happening in relation to our assets in the field, and we've executed on some corporate initiatives which we talked about. So really the fundamental growth value creation proposition we're looking at with Kainantu was organic, what we could do in relation to the assets we had in proximity to K92 and this Kainantu field, but also add to that. And we've added two projects obviously with the May River acquisition we did last year, the Teke deal we've done this year, and in addition to that, work in the field. So there's quite a lot happening. This is a startup venture, if you will, and we're building a platform. So the last 18 months is really about developing that platform. We would say now we've got to the point where there is a clear portfolio, a platform of projects to now drive forward in a variety of directions, all of which are value accretive for shareholders.
Well, talk to me about that, because if I'm looking at share chart, it hasn't been value accretive at all. It's come off during the year. You had a little resurgence at the beginning of this year, and it's kind of dropped, I guess, in line with the market. To be fair, but you're still a $10 million company. So I'm trying to work out at what point the value that you're going to release gets released, and what are the things that you think need to be valued that perhaps aren't at the moment?
Yeah, look, I think in terms of the critical valuation events that are forthcoming, I think when we met last time, we were talking very much about things that we were looking to do. So we were looking to do a collaboration arrangement around geophysics, for example, which looked very prospectus for us with our existing assets. So we've done that. We were looking to do a transaction that brought a resource into the company. With a major, so we've done that. So some of the sort of, I guess, events that we were alluding to, we've executed on. So I think that really does provide a platform for a re-rating or revaluation of the stock. The markets are obviously what they are. They're challenging markets. That's not to say that we shouldn't do what we can to push the company, try and get the value into the company that we need. But the markets are the markets. All I can do is not all I can do, all I will do is continue to look at opportunities which we see are accretive and give us an opportunity for value release in the future. In terms of share performance, everybody would like their share to be up. Ours has, as you say, look, it would be terrific as a CEO. I think everybody wants to see their share price appreciate. Ours, to an extent, though, arguably has held value relative to a number of peers that we look at. That's not to engage in hubris here today and say that's a great outcome. But what I would say that does do is it indicates two things: ongoing support from the shareholders who've invested in the company, and that was evident when I met with a lot of them in Toronto and Vancouver early in March. And I think it also indicates that we have a platform, we've maintained value in the company. The worst position we could get to, I guess, would be seeing our capital base totally arrayed, a bit to nothing, and then be in a position where it's very difficult to raise further money for some exciting propositions that are coming through. So, value, I guess, retained, not accelerating, but when markets change, I think we have a strong case for quite a significant re-rating. Just on an NAV valuation, if you will, and it's quite speculative because of different commodity prices and inputs and what have you. But the Kili Teke project of itself probably has an NAV of in the order of $80 million, let's say, which is materially more than our current market cap.
Well, then how do I look at this, Matthew, going forward? Because, like I say, the things that you have done, you've been busy, right? But the market's not valuing them in terms of what are you, $10 million market cap at the moment. Do we look at the Kili Teke deal that you've done with Harmony as a reboot? Is this going to be your flagship project? What happens with May River and the work that you've done there? Because I appreciate you've raised nearly $3 million, but $1 million of that is going to go on the acquisition. So what can you do with the capital available to you to continue this value creation that you talk about?
Okay, so good point. So I guess in terms of the capital we've raised, originally the intention for that and the remaining intention for that is to deploy that into the existing assets in Kainantu. So we look to take them through to a position where they're drill ready in the second half of this year. So that work is still on track, roughly running to schedule. So that's the intention there. And we think that gives us a pathway to define a resource for that project in the future. In terms of May River, that's re-engaging, if you will, with that project. So we've got a project team up at the moment looking at one of our key prospects, Mountain Gate prospect, which I think probably is potentially one which could unlock a lot of value in terms of potential for collaboration with a major or so in terms of working that asset out. So we see that's the value option there. And in terms of the Kili Teke deal, the closing of the Kili Teke deal is forthcoming. So we're working through a series of closing events in relation to that. The closing consideration or the execution for Kili Teke initially is about $1 million, but that payment's split into two components. So the upfront of payment for Kili Teke now is only $500,000 on closing, and whether we use the existing cash resources or further for that in the future, that project, the key intention there is for the immediate issue, opportunity there, I guess, is to close that deal really for $500,000 up front, which brings in an equivalent ounce resource of over 6 million ounces of gold. So that of itself, I think, is quite an interesting value proposition. Clearly, the market is looking to make sure that we can close that transaction before re-rating us accordingly. But that's just the start there with that asset. We bring that into the group and gives a resource into the company, quite a material resource. And from there, it's a process and an intention to build on that and take the company forward. Hopefully markets improve at the same time and the share price appreciates. It's an opportunity to raise more capital. The momentum builds and off we go.
Right, but let's get into the weeds with that one, with the deal. So it's $500,000 up front, and then another $500,000 potentially by the end of this year or beginning 2023 on regulatory approvals, right? So it's the money will need to be spent imminently there, and I get that you're going to work towards a PEA that, as you should, got to get some economics on this thing. There's a NSR over at 1.5%, and Harmony obviously pick up 9.9% of your company, right? So is that right, as I understand it?
They have an option to acquire 9.9% of the company.
Oh, right. At what rate?
Warrants. So the strike price for the warrants is 28 cents.
Got it. Okay.
So exercise price 28 cents to acquire up to 9.9% of the company. So, and in that context, Harmony doesn't get a free placement of equity to them. They have to buy into the story and invest into the story. So, and look, in that context, Harmony have been terrific to work with. They've been very positive about what we've done. They approached us, and I'm sure others in PNG, about acquiring this project, but we worked with them for a number of months, 6 or so months, on this opportunity, on the community activities that are needed to integrate this into our company, move it from their company to ours, national level activities. And, Harmony, I think, have indicated, subject to us continuing to perform, appetite to invest into KRL, not just to maintain a foothold in Kili Teke project, but also more broadly in terms of some of the opportunities and some of the things that they see us doing in Papua New Guinea.
Right. And what did you say? You say the number that kind of caught my ear, as it were. Did you say 2.6 million of gold equivalent, or was it something else?
Look, there's about 0.8 million tonnes of copper and 1.8 million ounces of gold there in the existing inferred resource that Harmony have developed. So, on an equivalent basis, and lots of people don't like equivalent calculations and I understand why, but on an equivalent sort of basis, that would give you over 6 million ounces of gold at this project.
Got it. Okay, right.
It's a really large gold resource coming into our company. So it's for us, it is transformation. It's quite a sea change event. So I think to the early sort of comments that maybe the company's been sitting on its heels and not doing a great deal, I'd argue that 12 months bringing 6 million ounces of gold into our company is equivalent ounces of gold into the company is quite an achievement relative to probably expectations that people may have had for the company 12 months ago.
Why would Harmony offload that for $1 million? Because, is it the grades? Is it, what do we need to know? Why are they not valuing 6 million ounces of gold equivalent?
I think so. From Harmony's point of view, they've sold this to us for a relatively low sum of money for us to get a foothold of this and take 100% of the project. But we still, in the future, look to do the PEA, and assuming that we, of our own, setting our criteria, take the view that that's economic. We complete a PEO, we make a payment to them then, and then further down the track we do a feasibility study, we prove values, and then make a further $4 million payment. So there are further payments coming to Harmony that have a royalty. So they're not giving it away. They spent $26 million on this project already, did 36,000 metres of drilling. So they've invested in this. Taking an equity stake in us keeps them engaged and involved in the project. But Harmony's real, position in PNG is publicly known to everybody. Really is around Hidden Valley and Gosselong. These are two world-class premier projects, and I think they take the view that that's really the focus for them. That's where they develop a really large, gold deposit. Kili Teke probably wasn't showing necessarily the, large corporate, ticking the corporate expectations, if you will, for a project for them. But having said that, it does meet criteria for us. So I think they were looking to find a credible partner in country to take this on and continue to develop it for them, probably taking on a different approach to optimisation of the resource as makes sense for a smaller company, smaller economies of scale, if you like, but still maintain an interest. So that's really their position. They haven't given up on Kili Teke. I think they've really engaged, been very helpful for us and continue to be so. But they're looking to open this up. And I think when we spoke in October, I talked to you then about collaboration with majors or large investors and what have you. And this is exactly the type of thing which we look to do from the outset when we set up KRL. When I set this thing up with APF guys originally and with a number of the key investors in Canada, the founder investors in the placement, is very much to look at, one, developing up our existing assets, but two, looking at clever deals that we could do in collaboration with people, majors and credible strategic parties. So, we would say very much that's the case here, and Harmony have been great to work with, fit that criteria perfectly, and that's really I guess the view that we're pretty on track with where we wanted to be with this this company.
Okay, so again, I just want to be completely clear because it feels to me like this is an important acquisition with an important group, right? So there's another, say, $1 million by the end of this year in total paid out. You've got $3 million on delivery of a PEA, or within 6 months of delivery of a PEA, and another $4 million in delivery of a PFS/feasibility study. So it's $8 million, which you will have paid out by the time you get to pre-feas or feasibility study, which depending on which route you go. Okay, and then they've got the warrants that they have at 28 cents. Today 18 cents. When do those options run out, or are they just there in perpetuity? I mean, when do they have to make a decision?
They've got a 5-year term on
5.
On the warrants.
Okay.
Yeah.
Okay.
5 years on closing the deal, which we expect to be in the next few months.
Interesting. Okay, so can we come back to, let's assume that of the, say, $3 million you raised, I mean, you were about $1.5 million in cash when I spoke to you in October. I mean, had you gone through that, or had you have you managed to keep a lot of that? I mean, how much cash have you got in the bank?
We spent cash through. We brought more cash in. We're looking at options to do a small private placement at the moment to the original investor consortium from APER Group. I think when we raised money originally in December, January, a lot of the shareholders there were aware of that. So we said in Q2 we'd be looking to do a placement to APER Group in addition to the funds we saw. So we're going through the processes of that at the moment. To your point, we complete that. We're pretty well cash funded through to the project horizon, if you will, the next 12 months or so in terms of our budget for the work programs and the initiatives that we've got in track at the moment.
Okay, so what exactly do you know? Okay, you're talking about an inferred of whatever it is, like 0.8 million tons on the copper and 1.8 million on the gold. But what else do you know about it? And what work can you do before presumably before the regulatory approvals come through? Can you work on it, or do you have to sit back and wait for the regulatory approvals? I mean, how do you come at it?
There's 2 phases to this project. One is obviously is critical in all of these parts of the world. We've talked about this previously, is the community activities. So we've got quite an intensive program engagement with the community at the moment in Kili, in Hela Province, in conjunction with Harmony. So I don't understate that as a side issue. It's obviously critical to get ongoing buy-in from the landholders. So that's the number one activity, which is ongoing. As actually today, as we speak, there's some activities occurring on that. The second point too, I think, is there's a lot of data already accumulated by Harmony. Obviously, when you've done 36,000 meters of drilling, the project, the way that it was effectively optimized through the Whittle model, originally very much looking at a large copper play. So we think there's opportunities to re-review and re-optimize the resource planning work through the Whittle model. We think probably taking a higher grade approach to potentially mining some of the blocks in the scar mineralisation, which is closer to surface, potentially is an option. And to your point, that's work which we can commence immediately, given the body of data that already exists for the project. Okay. So we actually did some work on that already, obviously pre-acquisition, as you'd expect. So that was good, and that proved a desktop value case, if you will. And now it's a case of executing further on that and drilling down on that. So we can immediately get into work at Teke, which is not capital intensive.
Okay, so it's not capital intensive, but it's really, really important that you get this right. And you don't want to put like good money after bad and so much. So I'm always intrigued by how companies who pick up assets set goals for themselves. I mentioned grade earlier. Obviously, the grade of the gold on this one is quite low. So you're going to need to show scale, presumably, right? Or reinterpret the data and come up with better grading on the gold. That's my assumption. What are you actually aiming to do?
Very much, we see the opportunity as the latter, is to reanalyze, reprocess the data, look at that from a different angle, run that through a Whittle model, what have you, and come up with a re-optimization, which is a higher grade result. Potentially, there's an opportunity for an open pit mine here as opposed to how it was being conceptually designed previously. And that's where the return is. We obviously don't preempt the work that we'll do in the next 6 to 12 months, but the initial work was pretty supportive of us making a case there, if you like, as to the options to re-optimise for a higher grade mine, which is very much something which a company our scale makes a lot of sense for us to do.
But you must have looked at the data in a data room before you did this deal, because otherwise you're right. So you've seen enough there to go, do you know what? I think this has legs on it. Despite what the grades are saying now, I think this thing's got legs on it, and we can make this better. Otherwise, you've committed $1 million to, maybe do some work and find out that this isn't the one for you. This isn't the project which is going to release the value on the company. So what about it did you like? I mean, it can't have just been the gold equivalent number is great.
Yeah, look, the equivalent's great. As I say, we did a look at some opportunities. We ran a few different scenarios through Whittle as how you could do this differently, using the approach that we would take, and it looks prospective. Definitely does. If we didn't achieve that gate, if you will, we wouldn't have proceeded with the transaction. There is also some scapolization, probably about 10 to 20% potential resource uplift of a high grade, which was not included in the original resource calculations done by Harmony because of, quite correctly for compliance reasons with the South African Mineral Code. But we see prospective opportunity to include additional resource in reasonably high grade scapolization closer to surface. And 3, there's some other exploration targets cleared near to the existing deposit. So we see that as another value proposition opportunity close to the.
But tell me what you mean by that for the uninitiated. Perhaps people coming in, which there are lots of people coming into this mining space, looking at what's the significance of these scans? Why are you excited about that?
So the scapolization is, it's a really high grade. Gold mineralisation close to surface, which obviously is likely to be more economically viable to mine, to bring into a resource, which obviously, 1, we build value into an exploration company by having a resource, and then 2, potentially down the track being something which is attractive to mine. Right.
Okay. So, in terms of your strategy going forward, you would be at the point where you feel you can start drilling. You're going to go for those first. Is that the nice, cheap, quick win?
I would think, look, most likely we look here, and obviously it's further work to do, but probably there's a degree of infill drilling to do around the existing known resource. And as I say, we'll run the modelling through. We'll look at the opportunities there and then probably drill around that infill program against the existing drilling that's been done. We think that's probably the most likely immediate route or immediate's the wrong term, near-term route, if you will, to bring the project through and continue to advance it.
Right. Okay. I mean, it's in terms of all the different moving parts. I mean, there's a lot of work's kind of gone on. I was reading. I think you've even got like a conceptual mining study on one of on the project, right? So there's a lot of work going on here. So there was an expectation that this thing would become a mine, or they're trying to work out whether this thing could become a mine. And so I've come back to, why this isn't something that Harmony would move forward themselves. So can you sort of explain, I mean, are they busy elsewhere? Have they got better projects elsewhere? Is that part of the...
I mean, the point is to return to the point. It's really Hidden Valley and Goswan are critical key projects for Harmony. But, the way the deal is structured, Harmony still maintain upside to the upside equity position to this project as it develops, and we'll continue to work with them. We'll take this forward ourselves. We take 100% control of it. We take responsibility for it. We'll continue to work with them on it. They remain engaged. They see the potential in this, but they see the potential in it is for a smaller operator such as ourselves to do the right thing by it. So they're looking for a smaller operator in country. They're also very clearly looking for, I would argue, a credible partner in country to take this forward for them. I'm sure that they would have had other opportunities to sell the project to other parties. But clearly, they see us as a credible partner here to take this on.
Okay, and that's an important point. That's an important point, Matthew. We talked about it in our first interview all those months ago. We kind of ran over with the team's relevant experience and track record. Again, for people who perhaps won't go and do that, can you just sort of remind us what the team's done before? So, why this is a credible team? Yeah,
look, in terms of the team, it's a good opportunity to talk about the team. I'm actually about to bring in a chief geologist by the name of Nick Franey, who I worked previously before at Oceana. Has got extensive experience in the mining industry in Asia and Africa, is very passionate, exploration focused individual, and will work with us. Joins us next week. Will work with us in terms of really driving these projects to the next level. They've got to the stage where somebody of his caliber, should be coming and looking to join the company. And help us take these projects forward. I've had the opportunity to work with Graham Duncan as COO for the last 6 months or so. Graham's been working with us in that role. I've worked with Graham at Archipelago, where we successfully defined a 3 million ounce gold resource there, and subsequently led negotiations to sell that project on to the Raja Wali Group in Indonesia. So Graham's going to step into a different role because he has some other corporate opportunities, but very much has overseen the geophysics program, which is looking really prospective for us. And look, in terms of on the ground, Graham Fleming, the original principal geologist who joined us, again, who I've worked with at Teke Tindang Archipelago, 40 plus years of experience defining, developing gold projects in this part of the world. And I'll tell you that Graham's input has been invaluable in terms of probably, I would argue, what's been done in the field in 2 years, potentially may well take other companies probably 4 years to have achieved. So part of that is very much the strategy of bringing into this company people who are very experienced and prudential and know what they're doing in this part of the world, in the region, to execute and deliver results quickly. So I would say that that's very much what we've done here. I can take you through the rest of the team as well, but I'm sure the time's marching on. But really good team. And I think one of the points for us always was that this is a team that's worked together in different guises in Asia, doing exactly what we've done. And I think that's probably one of the reasons why we've been able to push a number of these initiatives along at pace.
Okay, and look, thanks for the update. I think it's a really important acquisition. What's going to be more important is, what you're able to communicate to the market in terms of how you advance that, because it comes back to that what you said at the beginning. It's about unlocking the value, which at the moment you're not getting the credit for. So I appreciate there's lots of things you've been doing, but people need to understand or be helped, that you need to help them understand the importance of these building blocks that you're putting in place in country. So look, stay in touch with the sort of next few phases. It sounds like exciting rest of the year lined up for you. And we'll be delighted to take that phone call.
Yeah, look, the only thing I've just touched on, we haven't touched too much on the existing projects, and that's really quite respecting and exciting as well. We do have some really interesting emergent trends from the geophysics program, which we talked about last time. We were doing collaboration with K92. Obviously, in terms of collaborations with the loose association that they were doing their program, they helped us, supported us do ours. But the outcomes of this look excellent. We look to bring some further news flow to the market in the next month or two on that as well. So, Kili Teke corporate activities, great. I also would mention that there is interesting results coming out from the field as well, which are really encouraging, and I think will unlock, or certainly give a platform for unlocking value in terms of the field activity as well. And pleased to come on and talk to you about that in due course.